What's happening, traders? This is the Bearded Trader here to go over some trades I took this morning. Look at some different setups, some good, some bad. Had some good trades on with the ES mini futures. Nice U-shaped pattern on ECYT, and took a loss on that the HMNY. Got in it late, tried to chase it, and it fell back on me. However, had to make it up with that MNKD trade, bull flag setup. So that was a great trade as well. So all in all, I mean, it was a good day as far as money wise. It was a terrible day as it relates to execution, in the sense of trying to maintain at least 75% trading accuracy. Only being 50% a day. It's terrible in my personal book. Just things I like to try to hit, everyday goals I like to try to hit. But like I said, I mean, I made up for it on some other trades to have a great day as far as money wise. But with that said, let's jump into it. Let's look at this ES trade, because all in all, this market is on a tear this year. I mean, it's going pretty much straight up week after week. We get slight pullbacks here and there, but there seems to be a reason why. Whether it's, some people may believe, hey, the market needs to correct itself, it needs to drop 10-20%. At the end of the day, the market doesn't need to do anything. It's only going to do what it wants to do. We could say, hey, it's time for it to go down, I want to short, and what happens? The market shoots straight up. But if you look at a longer chart, or take a macro view of what the market is doing, it's actually doing what it should be doing as it relates to support and resistance. Now granted, I'm not a financial advisor, I'm not your broker, I'm not your dealer. I do not give advice to anybody. I will tell you my opinion, and you have to make up your own opinion based off of what you see on your charts. As far as me and my Thinkorswim charts, this is what I see the E-mini futures doing, and this is probably why the market has continued to go up this year. If you take a look at it, in 2015 the market just went sideways. So this sideways action is basically what? It's basically consolidation. So if the market consolidated for an entire year, it's only two things that can happen once it comes out of that consolidation. And I got in right here at 25.39, which was a bounce off the support area. We got a push up early this morning, a little profit taken right here, one bar, and a doji candle. So my confirmation, hey, is what? The next candle that forms above this doji, that's my entry. So I took a long position right here at 25.39, and as the stock pushed, or as the future pushed up, I started with one contract here, then added four more right here, giving me a total of 5 contracts. So as it pushed up, I just held through the break. We finally got our break on this candle, and did what? It continued to go higher. It continued to go higher. And as it went higher, I just took profits off the table. That was it. It was nothing, nothing spectacular about this trade. I got out around 25.44. Granted, is it still going? Yeah, it's still going. But to make $800 off that trade, that's perfectly fine with me. And considering the time frame, that it's 11:45, I have to get my son lunch and things like that about 12 o'clock. So I was cool with that. It was a nice setup, a bounce off support. We had a nice entry. I added to the position up over this pullback, got back into the position, and just rolled it up. So it was a basic ES trade. Those of you who are new to the futures or haven't traded the futures, do some research on them. Look at how they move. In the look at the margin requirements. I think it's like $5,000 to have in your account to trade futures. Every 1 point it moves, you make $50 for every 1 point it moves. So it's a good liquid product to trade. You trade it just like any other stock. Don't look at the futures or any commodity as something special. Just treat it like you would treat a normal stop. Look for the setup. If there's a great entry, hop in. If it's not, stay out of it. Next, CYT. It doesn't get any simpler than this as it relates to U patterns or rounded bottom patterns, whatever you want to call them. I mean, this pattern is probably one of the easiest to recognize, in my personal opinion. So when I saw it, I took a long position right here, right above this first 2-minute high, 608. I took a long position, just 3,000 shares. Pushed up 625. This candle would generally take place every time you have a good U-shaped pattern or rounded bottom pattern. You will get a break, you get a volume spike once it breaks through this high, then it's going to pull back. If you get a consolidation type candle, a doji or sideways action, you in there. You know that, hey, this previous resistance level will hold. Now it's a new support level. It closes the, it basically is closing the door behind you to let you know, hey, other buyers are seeing this. So as demand increases, what happens? The stock goes back up. Boom, there we go. My target was the overnight high, the 650. That was my target. I did not scale out. I'm trying to work on, just selling when I actually want to get out. And that will help with reducing commission costs, in my smaller account. And I think it would actually help me become a better trader. I can scale out with my TD Ameritrade account. It's fine. I'm not worrying about the flat $6.95. I'm cool with eating that price. But if you have an account where you're actually getting charged for every share, as well as a base commission price, then it makes more sense just to sell one time. Does it mean you need to be accurate? Yes, you do have to be accurate. So I got out right here at 650. I saw 650 hit the bid, and I sold. That was it. There was nothing more to it. Got a U-shaped pattern. Entries above this 1-minute high or 2-minute high. Got volume increased. Get a slight pullback. The pullback does not break our previous level of resistance. That lets you know it's a great level of support. What happens next? Boom, buyers step in. Textbook pattern. Let's look at MNKD, which it ran today. This was the runner that was needed on my end, to make this week mean something. I actually took 2 trades on this stock. First trade was right here, a break above this ascending triangle pattern. So we have this trend line and this resistance level. So I look for a break right above that. Got in, actually I got filled at 408. So I got in a little early, but it's cool. It's on the same candle. So I got filled in at 408 and added to the position right here, 437. As it pushed up, I was wanting to actually sell up here around this 475 level, but my attention went over to the ECYT trade because I saw that U pattern, and then I looked back, the stock had pushed down, so I sold out down here on this first trade around 452. So, and once that happens, once you get a great run, even if you're shorting something, once you get that first run, look for the pullback. That should make that second nature. If you're shorting something and you get a dollar or even 50-cent movement and you take profits, look for that pullback, because once you get that that bounce up, if you're shorting, if you get that bounce up, what's going to happen? People are going to see that bounce, and they're going to want to start getting in a short position, which will then give you another opportunity to get back in the trade or get back in that stock. And that's what happened. We got this pullback, hit our level, hit this support level, which was actually a level that I added to this trade over here. So once once that took place, let me fix this. Here we go. Once this support held, what I'm looking for is the next stock or next candle to make a new high with increased volume, and that's this candle right here. Volume went from 548,000 shares up to 621,000 shares. That's an increase. So take a long position over this low, which would be a new high forming. So took a long position at 451, and I actually got out of this trade right here at 406 or 407, based off of the time frame. I have some time restrictions around my trading, some other things I have to do, so I did not stay in this trade all the way up into this $6 range. But those of you who did, phenomenal. That's great. That was a great push to go from 447 to 650 in less than 45 minutes. That is a great push. This would have been a phenomenal trade for a small account to really jump start it, to make $1,000, $2,000, get the wheels turning. Now granted, it's a phenomenal trade for my regular account as well, by all means. But for beginner traders, you have to find these setups, and the easiest setup is the one you can recognize. I'm a firm believer. It may seem like I trade some of the same patterns. I just see it easily. I see a U-shaped pattern a lot easier than I see a head and shoulders pattern. So figure out the patterns you can recognize, even the candlestick formations that you can recognize, whether it's tombstone dojis or haramis or shooting stars. Figure out those things that you can recognize, so when they hit your chart, you can make a decision quickly. You're not scrambling trying to place certain trend lines and Fibonacci retracements and extensions. You can make a decision based off of supply and demand, which is your volume, the price, which is the candlestick action. You can get in a trade. So that's it for me today. So, like I said, it was a great day financially. Making $3,000 is great. Got to work on my accuracy. It's only 50% accurate today, so got to get better on that tomorrow. Tomorrow's a new day. We get better every day. So freedom exists not to do what you want, but having the right to do what you ought to be doing in life. That's freedom. I am the Bearded Trader. Y'all have a great day.